The truth behind Wall Street's Bitcoin grab is starting to show through the cracks. And once you notice it, you can't unsee it. You hear the headlines, you see the ETF flows, and you watch the price bounce around. But underneath all of this, something bigger and much more important is happening. Something structural, something global, something to do with control. So today I want to take you through the real story, because once you see how the system works underneath everything and who's the puppet master pulling the strings, you'll understand exactly why institutions are racing towards Bitcoin, why governments are rewriting their money systems in real time, and why you and I are standing right in the middle of the biggest transition in modern financial history. So stay with me, because we're going layer by layer, and the picture that forms by the end of today's episode, of today's video and story, will change the way you look at the next decade of Bitcoin and hopefully increase your horizons, lower your anxiety, and help you realize you're on the right side of history if you own Bitcoin. So let's get into it. All right, so when getting started, it's important to start in understanding the architecture of our modern power structure, because every empire has a backbone, something that holds the whole thing together. For previous eras, it was land. For others, military power. But for the modern era, the backbone is capital and arguably data, which is a separate topic for a different video. Anyway, when it comes to the power structure in the world, people talk about governments, elections, leaders, and policies. And those things do matter, but they operate inside of a larger machine, a machine built on the flow of money, the ownership of companies, and the incentives of the biggest financial institutions on the planet. And if we pull up Morningstar's ownership data, you'll notice something very interesting and perhaps not shocking. You see the same names appear across every sector. That is technology, energy, defense, retail, banking, pharma, etc. These firms manage trillions of dollars. They sit on the boards of thousands of companies and influence how capital flows across the entire system. The Bank for International Settlements has diagrams that map out how these global financial nodes connect, and it looks like a spiderweb, a web made of capital, governance rights, passive flows, and corporate influence. This web has quietly shaped the direction of the world for decades, and not through loud announcements, but through incentives and relationships. Think of it like a giant organism. When one part moves, the rest adjusts. When one part grows, the others grow with it. When one part weakens, the whole system starts searching for balance. And this is the system governments operate within. This is the system global trade depends on. And this is the system Bitcoin is now entering. But to understand why things are shifting so fast today, we need to rewind. We need to understand how the dollar became the center of gravity. So let's zoom out for a second, because after World War II, the United States emerged with the world's strongest manufacturing base, the world's largest gold reserves, and the world's most trusted financial system. So when global leaders met to design the post-war order, the dollar became the anchor. The Council on Foreign Relations has a great breakdown on the Bretton Woods timeline. That framework tied currencies around the world to the dollar, and the dollar was tied to gold. It created stability, liquidity, and confidence. And eventually, if you know your history, the gold link broke, but the network effects stayed in place. The world kept its dollars. Central banks held them. Corporations settled in them. Banks lent with them. And the US Treasury became the deepest, most liquid bond market ever created. And this became the beginning of something new, a world where the US dollar wasn't just a currency. It became the foundation of global finance. But over time, the system started carrying more and more weight. If you open the Federal Reserve's historical debt chart, you see a curve that slightly rises, then shoots almost vertical. Debt loads grow, rates move, inflation waves hit, and the math gets harder. And the IMF's COFR data shows something else subtle but important. The dollar's share of global reserves gradually trending down, not collapsing, just shifting, like a tide pulling back a few inches every year. A signal this dollar system is reaching the point where it needs new pathways. It needs to reinvent itself, basically. And that brings us to today, the multipolar reset. Right now, we're watching the world reorganize itself. You can see it everywhere once you know where to look. Reuters has covered BRICS expansion nonstop. Countries are building their own trading blocks, new pipelines, new alliances, new settlement frameworks. You have the gold nations rising fast, powered by massive energy revenue and sovereign wealth. And then you have India stepping into a major growth phase. You have Southeast Asia building new trade corridors. And you have Africa finally lifting itself up, becoming one of the youngest, fastest growing regions on Earth. And you have China pushing forward with its own manufacturing, infrastructure, and currency networks. Meanwhile, central banks around the world are stacking gold at levels we haven't seen in decades. And the World Gold Council is tracking this. And the growth is massive. It's a hedge. It's a signal that countries want optionality. They want stability during a transition. And according to the Atlantic Council's currency tracker, more trade is moving through non-dollar rails every single year. So right now, we are in the early chapters of a multipolar financial world, not an overthrow, a rebalancing. And every time the world rebalances, something new becomes the anchor that holds individuals together, which leads us to the digital money layer. And to talk about the new digital dollar, we have to talk about the Genius Act and stablecoins. And I made a whole video on the Digital Act as it pertains to CBDCs and digital IDs, which I highly encourage you watch to give you another glimpse of what's going on in the world and what's to come. So I will have that linked below for you to go watch if you're interested in this. Anyway, this is where today's story jumps forward. The US dollar is not disappearing, it's becoming digital. The Genius Act and stablecoin regulation show a clear direction. That is, one of to create a digital version of the dollar that can move faster, reach more people, and operate beyond the old banking system. Stablecoins are already a massive part of global finance. If you check Circle's transparency reports, you see billions of dollars sitting in short-term treasuries supporting global digital dollars. And Chainalysis shows how widespread stablecoin adoption has become. They're used in emerging markets, they're used for global payments, they're used in crypto trading, they're used anywhere speed matters. This is the beginning of a global digital settlement layer wrapped around the world's financial system. The BIS CBDC shows how almost every region is experimenting with digital currencies. Some public, some private, some are hybrids. So we see this is the next infrastructure layer, and Bitcoin is rising right in the middle of this transition. But while governments evolve the dollar, Wall Street is doing something else. They're making their moves on Bitcoin. And this is where today's video gets extremely interesting and important for you to pay close attention to, because I'm about to explain Wall Street's Bitcoin strategy and what's at the heart of it. So let's start with this question. Why is Wall Street racing towards Bitcoin so aggressively? The ETFs were their opening move. But when you pull up the CoinShares weekly flow reports, you see billions of dollars rotating into Bitcoin products almost every week in every market. Bloomberg's crypto dashboard shows the explosive growth in ETF assets. And Arkham Intelligence reveals how large custodians are now responsible for enormous Bitcoin pools. Wall Street isn't buying Bitcoin directly. They're building wrappers, ETFs, funds, structured notes, treasury tools, lending products, futures, options. They're basically doing to Bitcoin what they've done with every major asset class for the last 50 years. And why, once again? Because the moment you wrap an asset in a financial product, you gain influence over it. You gain ways to hedge. You gain ways to extract value. You gain ways to move with it without actually touching it. And Bitcoin is no exception. Bitcoin gives Wall Street flows. It gives them liquidity. and it gives them leverage during volatility. And mining is the next layer of this operation. Hash rate index shows exactly how quickly mining power has been migrating towards the United States and publicly listed companies. And why does that matter, you might ask? It matters because once miners plug into capital markets start pulling the levers. This is how the financial system absorbs an asset. Bitcoin's rules stay the same, but the layer on top becomes controlled by the institutions that move the most capital. Surprise, surprise. So the question is simple. Do regular people get pushed into the wrapper layer, or do they hold the real thing? So this brings us to the heart of this battle and into the nuance of what is really going on, which is the battle for the network. We all know, if you've been here or understand Bitcoin, that Bitcoin survives because it's decentralized, mining across many regions, nodes run by individuals, competing software implementations, no single point of control or failure. And you can see node distribution live on BitNodes. You can watch mining geography on Cambridge's CBECI map. You can monitor mempool congestion and block flow on mempool.space. This decentralization of Bitcoin's nodes is Bitcoin's very immune system. But here's the tension point. Every time Bitcoin gets wrapped into financial products, every time it gets borrowed against or becomes a collateral engine, another part of the system gains influence over the price cycles. NYDIG's research breaks down how leverage creates forced selling events. Most people blow up because they borrowed too much, not because Bitcoin failed. And this is why self-custody matters, not as a slogan, but as survival. When you hold the real Bitcoin, you keep yourself aligned with the actual network. You hold the keys, you hold the sovereignty. And ultimately, you control your own sovereignty in the future, which is why I encourage you to go watch my digital ID and CBDC video once again, because I talk all about this. And this is why it's so important to hold your own Bitcoin, because it's the asset that cannot be diluted or disabled. When you hold just a Wall Street wrapper, someone else holds the keys, and the difference becomes everything during this next transition. So with all the complexity happening around the world, you don't need to become a macro genius. You don't need to decode geopolitics or predict every market swing. You just need a strategy that works across every cycle the world throws at you. Glassnode's long-term holder supply shows one thing clearly. The people who hold for multiple years outperform almost everyone. DCAing, right? Dollar cost averaging into Bitcoin. That means just buying a little Bitcoin every month, every day, every week, on autopilot. And actually, River's DCA chart shows that dollar cost averaging beats most active traders. Isn't that crazy? It reminds me of the tortoise and hare's little child story, where nice and steady does it, right? The tortoise or the turtle ended up winning because it just kept going and didn't stop. Well, that's Bitcoin. And your strategy if you just dollar cost average into Bitcoin. And as we start to wrap up today's video, it was actually Simon Dixon's interview that inspired me to make this show. If you haven't seen it yet, I will also link it below, and I highly recommend you take the time to watch because he actually has a YouTube channel where he talks about all of this that I just brought you today. I just simplified it for you, but he's a proper Bitcoin OG. He's been in the space a very long time, and he's an early investor behind some of the biggest crypto projects that we know now, including like Tether and USDC. Anyway, it's truly a masterclass on how power shapes the world we live in today, even beyond finance. And my biggest takeaway was his rule that ties it all together, which is very simple. One should simply own more Bitcoin this month than we did last month. Hold it in self-custody. Keep going for 4 years and let time do the heavy lifting. This is how regular people outperform an entire financial system built around extraction and leverage. This is how you keep your sovereignty in a world moving towards programmable money and digital IDs and financial rails controlled by the biggest players on the planet. This is your edge. Bitcoin gives you leverage the world cannot take back. And that is why this moment matters. So as we wrap up today's video, Just remember, you are early. If you are here and you are holding Bitcoin and you self-custody it, you are early. You are on the winning side of history. So don't be bothered by short-term price drops or volatility, because right now money is shifting, power is shifting. And the signals are right here in the open for anyone willing to slow down and connect the pieces, or simply tune in here on my channel, because I will come to you Monday through Friday and explain everything that's going on. And I'm constantly doing research, and I have an incredible team that's constantly doing research too. So we bring you the best of the best and we explain what's what so you know what's happening. Anyway, it's beautiful because Bitcoin is becoming the escape valve through all of this drama in the market. And most people will realize this after the transition is complete. And you get to see it while it's happening. And if you would like a part 2 on today's topic, just let me know in the comments section and let me know what specific questions you want to make sure I address, because there is so much more to break down. I love you guys so much. Happy Thanksgiving if you are in America, and I will catch you guys here tomorrow. Ciao.